6, 5, 4, 3, 2, 1.
Hello, how are you doing? Good to see you. Welcome along, welcome. I apologise if the music is a little bit loud and you're waking up in the United States this morning with a hangover from your Independence Day celebrations, but I'm sorry about that, but it's time to sharpen up because the non-farm payrolls data is about to hit the wires. And it should be a good one today. We're expecting a bit of volatility, I would have said, in what is now a good start to the second half of the year. And it has been a busy session, no question about that, because we've had a general election here in the UK overnight as well, and a complete shift in our political landscape as well. So I want to cover that a little bit as well. So yeah, thanks very much for coming and joining us. The numbers will be hitting in around about... 14 minutes time. So we haven't got too long. This is what we are looking at on the stats for today. We are looking for 190,000 new jobs to have been created in the United States over the course of the last 4 weeks. Previously that was 272, but yeah, of course, you know, these things, they can get revised as well, as is often the case. The unemployment rate as well, that is set to come in at 4%, a flat rate on that. That is slowly ticking up. And notice the Canadian unemployment data as well is slowly starting to go up as well. Average hourly earnings as well, they're expected to tick down 0.3% on the month-on-month reading for June. So I've got a dovish feel about it, you know. I was just posting in the Discord room a little while ago about some of the big guys, some of the big banks that have posted their estimates for non-farm payrolls. Today, JP Morgan are saying 200,000 and then a flat reading of 4% on the unemployment. Goldman Sachs, I'm with Goldman Sachs on this one. They are particularly dovish at 140,000. I think around about 153. But we will see. You know, NatWest have said 200. Bank of America have said 200,000, and Deutsche Bank as well. They're pretty hawkish as well, 225. So it remains to be seen. We will see. We've got a competition. If you are interested in getting involved, you could win yourself a free evaluation account, which is fantastic. We had a winner last month, and we've got another one to give away this month. All you need to do to win a 14k evaluation account is tell us what you think. Guess the number. Head over to the Discord chat. You'll see it over here. There it is there in front of you. We've got a fantastic community on Discord. If you want to win this 14k evaluation account, all you need to do is stick your estimate of what you think the number is going to be, stick that into the Discord, and then our moderators will take care of it all over the course of the weekend, and we will hand that out. So congratulations to the winner from last month, and it was definitely a good competition. So please do get involved. Also as well, if you do want to get and you are interested in the competition, but you do want a good deal on your evaluation, and a good deal on your instant funded accounts, then we've got an exclusive non-farm payrolls promo that is specifically just for the live stream. It's not going to be emailed or anything like that. It's just for people that are watching the live stream, and it's the best deal we've got at the moment because we've also got our summer promos running as well, and this is a 40% discount. You just need to use the promo code FARM40. Use that in the coupon promo box on the checkout, and you can get 40% off a 14 or a 40k instant funded or evaluation, one-step evaluation account, and you get a level 8 unlock add-in thrown in there as well, which is a fantastic deal. Okay, so what are we got to do today? So we're looking for 190,000. I suspect that the unemployment rate is slowly going to tick up, and I'm still dovish. I'm looking for some traction from these interest rates to start biting on the system. You know, again, you know, the American economy seems to be defying gravity, and now with an election year as well, you know, I think we have to see something. So maybe Goldman Sachs have got a little bit of a heads up on something. So I'm going to stick on the dovish side. So just to catch everybody up in the 10 minutes that we've got before the numbers actually drop, the UK election, obviously this is not new news now, but the Labour Party have won a landslide victory in the UK overnight. That is going to change markets, going to change the dynamics in markets over the course of the next, well, certainly in the next year, something like that. Now, if we look at the key assets for the UK, I think the most notable thing to say from a market's point of view is the fact that the reaction from the pound was pretty muted last night. The Forex markets close at 10 p.m. here in the UK, and then they reopen again. And I was looking for some volatility in the pound. I'm bullish on the pound. I've been bullish on the pound for a long time now, since Liz Truss and that whole gilts market fallout thing from a couple of years ago. I think systemically the pound is rotating. But yeah, a UK election could give you some volatility in the markets, but last night in the pound, not much at all. So I think really we've got a product of dollar weakness in that sterling price at the moment. These are both weekly charts here of the pound and the dollar on the left hand side, and on the right hand side you can see the FTSE 100. Now, this is generally considered to be some sort of a proxy for the UK, because it's our leading stock market, but always bear in mind with the FTSE that it's a far bigger proxy of global sentiment, because a lot of the companies that comprise the FTSE 100, they don't have much of an impact on the domestic economy here in the UK. So whilst there will be some uptick on the FTSE potentially over the course of the next 6 months, you've just got to bear that in mind. Now, with it being a change in political landscapes to a left-wing party, generally what they tend to do is they tend to go on a bit of a spending spree. And I think the Labour Party historically here in the UK has been responsible for one or two asset bubbles in the past. So that is something that's potentially going to be coming down the pipeline over the course of the next year. So I am bullish on the pound as a result of that, but we'll see. Okay, right. Now, if you remember last week, we, in the live stream, we set a poll on the YouTube channel talking about summer volatility. We've got our summer sale campaign at the moment. You can see there you get 30% discount off everything if you use the summer coupon code on the website. But we thought it'd be kind of fun to just talk a little bit about market volatility during the summer, and we put this poll, and thank you to everybody that actually just went on there and voted to see which was the market which is potentially going to historically give you the most volatility over the summer. People tend to think that the summer is dead, there's nothing happening. It's not true. You do get pockets of volatility, and is there a seasonal tendency for a particular market to give you some volatility? Well, these are the results from the poll, and I promised last week that what I would do is I would go back and do some research on pulling some seasonal tendencies and put a little bit more data behind this kind of estimate. And I can't believe this is really, really fascinating. So all you guys think that gold is by a wide margin. I mean, gold is probably the most popular instrument that most of our traders use. It is very, very popular. 56%. That's quite a lot. So let's have a look at the actual statistics. We'll start with the S&P 500 and the euro dollar. Now, these are seasonal tendency charts. I've summarized them quickly, but this is over a course of a year. So January through to December. So that red box in the middle is basically showing you the window from June, July, August, that 3-month summer period. That's showing you what the volatility is like in that area. So S&P 500, okay, that rough. I mean, we're only gauging it. I'm not putting any actual statistical data behind it, but we're just eyeballing it. So you can see in comparison to the euro dollar, which would represent our FX markets, the S&P 500 is slightly more volatile. Okay, now look at the next two markets as well. Gold market on top, and then also crude on the bottom. Now, I would say that out of the four looking through the charts of these this morning, I would say that gold potentially has its edge as it rallies into the end, or it has a tendency to rally into the end of the summer. And that in itself is pretty interesting. So you can see it there. So out of all four of them, if we had to pick one, it's probably not crude oil. It's certainly not euro dollar. Maybe S&Ps into maybe S&Ps or maybe gold, or stock markets into gold. So I would say that gold has probably pipped it, which means good job, guys. Fantastic. Amazing. We seem to have nailed it. So if you're looking for a market to trade over the summer that is going to give you the volatility that you want, because statistically, gold has it. So there we go. Really, really interesting stuff. Okay, so now we've just got 5 minutes to go now as we lead up to the non-farm payrolls. So what I'm going to do is let's just bring back our data for 1 second, and let's just run through those statistics one more time. If you've got 5 minutes now to get that vote into the Discord, so please do head on over to Discord and sign up, scan that. In fact, let's bring that QR code back up again so that you can see it. There it is. There you can see it. Bring that QR code. Scan that and then bring that over to your phone. Scan it on your phone, head over to the Discord, and then you'll be able to add that vote into the Discord, because you've still got 5 minutes left, and then it will count in the poll once the data is released. So what we are looking for is 190,000. 272 was the previous reading, but it's the unemployment for me is the thing that if that starts to tick higher, that is how you know that you've got some pressure now starting to head on top of the system. So it should be a good one. We're always going to get some volatility. I'm on the dovish side, which is basically a stocks up, dollar down play. And let me bring up my charts now so we can just tune in and observe exactly what is going to be happening. So bring over the charts. Let's get rid of the pound and the FTSE. And you can see here, this is our DX trade platform, which is a phenomenal bit of kit. We've got a great app that downloads as well on mobile as well. So if you want to use DX, it is a very, very popular trading application. You've got a choice of desktops, and you've also got a mobile app. It's FTUK DX in the App Store, but it's Android only. We don't have an iOS version at the moment. So you can get access to your account and off you go. But this is the DX platform in front of you. I think last time out at Non-Farm Payrolls, we were using the C-Trader platform. So they're all different tools, doing for different jobs. It's just a question of preference. What seems to be happening in the platforms at the moment is that they do tend to be slowly starting to tailor what they're doing specifically for prop firms, which is kind of good to see. We have a very good relationship with the guys at DX Trade. So this is their trading platform that you can see in front of you. We've got 3 minutes to go, and I've put the core markets that you would expect to get some volatility in. I've put those at the bottom. I'll put them all in front of us here. So we've got gold in the top left-hand corner. We've got the euro against the dollar in the top right. Obviously, bear in mind that when that is rallying, that is the dollar weakening. We've got the S&P 500 that represent our stock markets. That is in the bottom left down here. And then you've also got the dollar against the Japanese yen in the bottom right-hand corner. But bear in mind that the quotes on that are the other way around. So that's dollar yen. So basically when that is, so if we were to get dollar weakness, you would expect dollar yen to print to the downside. Okay, so it's time to start to concentrate in. We're not doing any analysis. We're just basically just printing the number. So we're not going to do any analysis. But what I'm going to do is with 2 minutes, I'm going to bring up my squawk now. Yeah, so we've got US data and Canadian data. Obviously, don't forget the impact on the markets from non-farm payrolls with the Canadian data as well. It can make a very scrappy trading session for the dollar against the Canadian dollar when we get that, because it all tends to come at once. Now, 2 minutes to go. So again, gold in the top left-hand corner, euro dollar in the top right. The dollar against the yen in the bottom right, and the stock market in the bottom left. Okay, right. Looks like we are all set and ready to go. We've got 1 minute 20 seconds to go. Now, obviously, with non-farm payrolls, it can be quite difficult to get your position in. But always remember, if you've never traded before, this is still really useful information to watch because you learn an awful lot from the volatility. You learn an awful lot from watching how the market prices in, and often I find that non-farm payrolls itself tends to be a very, very good, useful indicator the following week. So the volatility that gets created now, just mark that as a window. You can quite often find that can actually help you paint out how the markets are going to trend into the course of the next week. So it's time to concentrate. We will. I'll read out the numbers. So we're looking for 190,000. I'm on the dovish side. A 153 for me, but I'm usually wrong, so you know. Okay, 20 seconds. Good luck, everyone. Dollar strengthening on, dollar weakening already. 206,000. 4.1% on the unemployment. That is meaningful. Look at that euro dollar. Look at gold. Wow. Look at the S&P 500. My goodness me. Minus 1.4k in unemployment for Canada.
The participation rate's at 65.3%.
That is a spike there on euro dollar. Look at that. So we're immediately priced in 30 pips off that. I mean, it's hard to trade that kind of thing. It really is. It's hard to jump in. We should never ever do is gamble into it. I mean, that's not a good thing to do. And always remember, it can feel like you've missed out on an opportunity. It's never the case. It's never ever the case. So if you didn't get your position in the market, if you didn't get on the right side of it, never ever think that you're missing out as the market's moving around in such a volatile way. There's always more opportunities, and we've got a whole US session ahead of us as well over the course of the next 6 or 7 hours. So yeah, there's going to be plenty of opportunities. And to be honest with you as well, the volatility that you get created around this, it gives you really good handles to work with. The peak and the tops and the bottoms of that, the structural highs and lows, they're really, really useful to actually work with.
Was revised down by 54k to 280.
So just to recap that, so no, I haven't got it printed here yet. It's a pretty interesting session. Yeah, that price of gold really going up there. Let's just bring it up to a slightly higher time frame. Yeah, you can see it there. Just found the top end of the support range here from 23.47. And it particularly when you're trading with leverage as well, that is a very, very harsh lesson if you're on the wrong side of it with a lot of leverage. So but yeah, really starting to extend now. So yeah, really good, really interesting. So yes, thank you very much. We have had an interesting non-farm payroll session. Please do bear in mind as well that we've got this promo operating for the course of the weekend on our live stream. So if you do want a 40% discount, then please head over to the checkout and you need the code FARM40 and you'll get your 40% discount. But it's only for 14K and 40K evaluation and instant funding accounts. So just bear that in mind. Okay, that's brilliant. So that's everything we've got. So another non-farm payroll has been done and dusted. Hope you've had a good trading week and a good session. That is it. We are now firmly in the second half of the year. Have a fantastic weekend and we'll see you all next week.